Hi everyone, let's have a look at my low time frame and micro preferred and alternative bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the triangle that I've seen appearing here and there. And from an Elliott Wave point of view, let's dissect this triangle, which for me is a very big alternative scenario and not a preferred one. So first of all, a couple of rules for a triangle. A triangle is always a 5-wave structure of which all the waves are 3-wave moves. So you then have a first structure, second, third, fourth, and then eventually a fifth structure, after which you expect continuation. 4 out of the 5 waves have to be a zigzag, which is a 5-3-5 wave structure. Now, you can have a zigzag over here, that is fine, also over here. And currently in this structure, I prefer this to be then a wave A, followed by a corrective structure and eventually a wave C still in the making. So this would then be an A, B, and then a potential C. That also means that it is very early to even call this a triangle. Usually you can only call a structure a triangle once wave D is in. So once this is a wave A, B, then we have C, and then we have D. Once D is in, you're going to check all the rules, you're going to check the volume, which is the main problem of this scenario, and then you're going to think, okay, this might actually be a triangle. So also, in my opinion, it is too early to call it a triangle, but as mentioned, the main problem is the volume. In a triangle, you want to see the volume decreasing. So the first structure then has the highest amount of volume, which is basically non-existent over here. And then once the pattern is evolving, you want to see volume slowly decreasing. However, you can clearly see that volume has been increasing in this structure over here, which is not what you want to see in a triangle scenario. And just a little golden nugget as well is that if we look at a triangle, 4 out of the 5 waves have to be zigzags. It can be 5 out of 5, but it should at least be 4 out of 5. And if it is 4 out of 5 waves being a zigzag, then usually either wave C or wave D is the complex structure, which is then the not zigzag structure, basically. Now, if we look at a triangle, usually beginning traders are the ones that learn about trend lines and about patterns, and you see very often fake outs of these classic structures. So what I'm actually looking for is potentially a fake out to the upside. So then what is the beginning trader doing? They're trading the breakout, expecting upside. However, what can then be nice for a fake out is to then move to the downside, faking out to the bottom, where then people are going to be like, oh, short, there we go, boom. And then bring it back to the upside. And this is something I think is a very interesting scenario, and I'll explain this further in my preferred scenarios that I have for you. So first of all, let's go at this scenario where we're now looking at this to be a W structure. Then we have a bigger wave X to the downside, 3-wave structure, followed then by a wave Y to the upside. So this over here is the first W, then we're looking at a wave X and then a wave Y for this wave X. So currently we're working on the middle structure, wave X over here, where an interesting target area for this wave X is between 27.3K and 27.5K, also with the highs that we have over there. For then a potential move to the downside, where still the daily naked point of control on my ATAS chart 50 ticks for the ones interested is not yet hit at 26,350 for potentially some support for then a move to the upside. So we then have a very big ranging structure, but we then fake out the triangle at the high, fake it out at the bottom, and then continue to the upside for then a wave Y to the upside, which then is a 3-wave structure to the upside as well. So this is for me a very interesting scenario at the moment as a preferred scenario, this one, where an alternative scenario is that this could be the high of wave Y. So now wave X is already finished. So we have 3 waves in W, 3 waves in X, and then we're working on a 3-wave structure for eventually wave Y, where the main target area I just mentioned is going to be the end of this wave Y for then a continuation to the downside to lower prices. And that is, as it said, now an alternative scenario where the potential trading setup is that if price is going to approach this area, we of course want some proof of resistance, right? Maybe you want to see a market structure change, maybe you want to see bearish divergences or on one of the indicators, whatever you're using, but some proof of support. And if price is pushing to the upside with increasing volume, this of course is a no-go. That is, by the way, for all scenarios I show in videos, which are all educational, of course, for then potentially a move to the downside to lower prices. Now the target box over here is between 27.3K and 27.4K, which is a very important target area, and I do like to mention the triple top at 27.5K because there must be some interesting liquidity resting above those highs. If we then go to the micro scenario, and this is important because previously we had this as a wave A, followed then by this being a wave B, and then this being a wave C to the upside. However, as price has been evolving, this move to the upside is very, very horizontal. And yes, a wave C tends to be longer than a wave A, but as it stands now, this does not look wave C-ish at all compared to this being a wave A. So I've been thinking about different scenarios, where one of the scenarios I had in mind is this then being a wave A to the upside, followed by a 3-wave in W, 3-wave in X, and then an ABC expanding flat. So this then is an impulsive structure to the downside, in then a wave Y, where this target box is now going to be very, very important for this scenario. So this target box sitting between 26.8K and 26.9K is the main area of support for then a potential move to the upside for then that wave C, in this then to be a wave A. Then we have a 3-wave in a wave B, for then eventually a wave C to the upside, where the target area again is the same as in the previous scenarios, with that triple top at 27.5K and the target box that we have between 27.3 and 27.4K. Now the potential trading setup over here is only in play again if we see proof of support. At the moment, price is pushing to the downside. You can see price moving to the downside, also a bit impulsively. We see volume over here with a bit of a spike. We want to see something, whatever it is that you have in your plan. You want to see bullish divergences. You want to see a market structure change. You want to see something, a certain candlestick pattern, whatever it is that you have in your plan that could support you with the potential reasoning of why you should enter a long in this potential support area. Because of course, no one is on this channel FOMOing, YOLOing, or whatever it is, because we are disciplined traders on this channel, and so are you. Now, if we look at the CVD divergences, that is actually quite interesting, because over here, when I posted my videos earlier this morning, my update earlier this morning, literally a few candles after we started creating bearish divergences. So if we go to this structure, so this, by the way, is the high that we made at the moment before we had this move to the downside. So if we move into this structure over here, you can see the price creates a lower high, but on the yellow line, a higher high. This happened literally after the update, around the moment it uploaded on YouTube. So bearish divergences created over here for then the beginning of this move to the downside. And as you can clearly see, since that moment, price has not recovered. Instead, it started to create more bearish divergences. Again, lower high on price over here, lower high on price, higher high on the CVD, more bearish divergences. Now these bearish divergences have already played out as price has took the low, but of course this is an important reason for why price is also pushing towards the downside. So now we are at the support area and we have to wait and see what price is going to do in this area. Very, very interesting area indeed, for potentially then a move to the upside, depending on what we see, of course, in your plan as well. Now I do want to show you something important to end this video, and that is we do have bearish divergences. So over here, this is the 1 hour time frame, we have bearish divergences between the highs over here and the lower high that has been created. Now with the preferred scenario I have, where we still get a bounce up to the target box, we can still have bearish divergences over there as well, for then a push to the downside, where the target for the bearish divergences is 26.3K. Now they are already valid. We don't have to come to the upside for the bearish divergences. This is more than enough, where the target is still 26.3K. And if price is going to take this target to the downside, the bullish divergences can become interesting. So we had bullish divergences first. That's important, which I'll explain in a second. We have bullish divergences between the low over here and the higher low created, where the target is 26.6K. And these divergences existed before, then later the bearish divergences came, because for the bearish divergences we first had to make this high. And from experience and my statistics, the higher probability divergence is the first one that exists. So basically the bullish one has at the moment a higher probability as it stands, but of course it is a probability. So it's still possible price is just going to do that, because no CVD divergence or indicator is 100%, right? But we both have bullish and bearish divergences, and that is very important. And if the bearish divergences play out in the scenario I explained, we maybe take this low at 26.3K. That could be a potential, like then the bearish ones have played out, but the bullish ones could then be extended to here, for then a move back to the upside to take the target at 27.6K. So very, very interesting stuff that is going on. But of course, we always have to wait and see how is price going to approach this area. Because if we are going to tank to the downside, as we might do right now, because we don't know, of course, we see a little bit of impulsive structure, then price can also just move to the downside where the corrective structure is already finished, in this being an ABC wave structure, and then we have an impulsive move to the downside in a wave 1, 2, then another 1, 2, and then this might be the beginning of a bigger 3 to the downside. So the invalidation for this scenario is taking the low over here, and we are responsible traders where we wait for proof of support before entering longs, and we wait for proof of resistance before we enter our shorts. So I hope this video was helpful or very valuable to you. As excuses also for uploading later because I recorded an update without sound. So please check out the macro and high time frame video also if you're interested. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.